It's all noise, right? After every halving, we tend to have this transition that I call from crypto spring to start of crypto summer. We usually get this sideways chop, and it's kind of normal. But this market is hilarious because everyone loses their minds and they're like, it's all over. It's the worst thing ever. Everyone gets chopped around, trading around in stupid shit they shouldn't be doing. And then just when everybody thinks it's never going to move again, it then explodes higher. So, I've been like you, just kind of wryly observing the psychology of this space.
Welcome to today's video. Raoul, the CEO and co-founder of REKT Vision, is sharing his ideas with us. In the beginning of altcoin season, when other cryptocurrencies, or altcoins, frequently outperform Bitcoin, Raoul makes a strong analogy between the present market cycle and this time around. Similar to the summer of 2020, when altcoins like Ethereum bottomed out in relation to Bitcoin, he thinks we're about to enter this new season. According to Pal, we are in the early phases of a new cycle, which he calls crypto spring, with Bitcoin spearheading the first rebound. In this stage, fresh and exciting ideas like Solana usually perform better than Bitcoin. Pal emphasizes his substantial investment in Solana and his continued high level of confidence in the company's future despite the gloomy mood expressed by other investors. He thinks that during the next 18 months, Solana and other cryptocurrencies will probably do better than anticipated, even if the market may not have hit its lowest point yet. Based on his theory that the market is getting close to its bottom, this view is presented. Let's get started and hear straight from Raoul as he discusses his viewpoint on Solana and Bitcoin.
Imagine if we wind forward and before we know it, there's more financial assets going on to ETH because you don't get fired for using ETH, right? So let's say more financial assets, and they could be on a layer 2, but it still starts to accrue value because financial assets are rapid velocity and high volumes. That narrative can switch so fast because the meme coin narrative is just a bunch of us who live in crypto land as natives. But really the thing that will drive this space is new capital into the applications layer of what this technology does. That's but I don't see it yet. Like you're saying, it's like, why bother? I kind of agree right now. We just don't know. All I do know is once you get to network adoption with some real applications, it tends to stick. So, if you think of all of the other big layer ones that came out in the past, none of those go to all-time highs again because they never got the network activity really. So Solana's clearly proven product market fit. When we abstract away everything from the space, these are businesses that are commonly owned that sell block space. That's all they do. And Solana sells good block space for various use cases. ETH and Bitcoin the same. So does it become boomer or does it matter? I think we need to be careful not to impose how the space is today, which is generally still retail driven and narrative driven versus use case driven, which I think will develop over time, which is like who's actually building, if Disney are building their Web3 architecture on XYZ, it's going to make a difference. It's going to bring in millions more, tens of millions of wallets and tens of millions of dollars of new activity every day. We just don't know what that is yet, but it will shift around. What I do to help me with this, to stop getting into that trap, is I just look at the cross rates of the charts, like on the weekly chart basis, and just if something is breaking out versus ETH or Bitcoin and it's got something going on, it's very interesting, and that tends to be persistent over a cycle. So I'm looking now at what is the next big trade, because the next big trade is the Solana of the previous cycle. And it's going to be whether it's Monad, whether it's SWI, whether it's Celestia or what. I have no fucking clue. But what I'm doing is, on my trading view, is putting all these charts versus Solana, because I ain't going to switch any money unless I can prove that it's going to outperform Solana. Like I look at the WIF Solana chart and WIF outperforms Solana. So I don't mind a bit of that, but it's higher risk. So I just put one versus the other on everything. It's all noise, right? After every halving, we tend to have this transition that I call from crypto spring to start of crypto summer. We usually get this sideways chop, and it's kind of normal. But this market is hilarious because everyone loses their minds. And they're like, it's all over. It's the worst thing ever. Everyone gets chopped around, trading around in stupid shit they shouldn't be doing. And then just when everybody thinks it's never going to move again, it then explodes higher. So, I've been like you, just kind of wryly observing the psychology of this space. I mean, the psychology of this space is basically like an 11-year-old. And when you play through all of this and you ask people their deep-seated fears, everything's going to crash, or China's going to invade Taiwan, or the Chinese currency is going to devalue, or what's happening in Japan. When you play through all of these, the outcome for all of those is more liquidity. Every single one. The only time it's not more liquidity is when the Fed are tightening, as are the other central banks, and they're purposely withdrawing liquidity. Everything else leads to more cowbell. And I just keep that in the back of my mind when everybody starts freaking out. But if China invaded Taiwan tomorrow, it would be the largest injection of liquidity in all history. The other way to think through this, I wrote about it in GMI, which I flicked to you guys last week or early in the week, was that when you look at what happened to the commercial real estate, you look at Credit Suisse, you look at the yen, you look at the Chinese, there's one big story there, which is there's a shortage of dollars, and it just keeps moving around. And then you see Yellen going to China twice. There's a trade. She's the biggest bond salesman in the world. She's now bigger a bond salesman than Mike Milken ever was. So her job is to sell bonds. She needs to go to China and say, listen, guys, can you buy our bonds? And they're going to say, yeah, but to buy your bonds, we need some dollars because we're fucked because we've got debt deflation going on and all our property developers are in debt dollars. So somewhere within there, and they're using Japan as like the threat. Look what's happening to their currency. It's going to happen to you too. Japan actually needs dollars too. So I just think there's a dollar injection of liquidity that's coming to solve this, because if not, China doesn't buy US goods. It's that whole kind of circular world trade thing. So
Raoul Pal recently spoke on the main problems that the global financial system is experiencing, stressing the catastrophic US dollar shortage and its far-reaching effects. He emphasizes how this dollar scarcity is having an impact on a number of industries, including commercial real estate, credit markets, and the Japanese yen. China's economy is being greatly impacted by this problem as well. Pal uses Japan as an example to show how a nation that is experiencing currency problems and a shortage of US dollars might encounter serious economic difficulties. He issues a warning that if China's currency depreciates, it may come under comparable pressures, which would have serious consequences for its economy. Pal believes that in order to solve the problem, there will be a significant infusion of US dollars into the global banking system. He makes the case that this involvement is essential because, in the absence of it, China would be less able to buy US goods, which may upset the entire system of international commerce. Let's now explore some more of Raoul Pal's observations about the state of the world economy.
Janet's rebuilt the TGA. Her job is now to spend it. Normally, after she's rebuilt it from tax season, there's like a $250 billion drawdown, right? That's whoopee, considering that Powell has reduced QT enormously from 65 billion to 25 billion. So Fed net liquidity goes up. The ECB are going to cut. They've made it really clear they're going to cut as fast as possible. And the Fed will cut at some point, or at least the markets will start pricing it. Then we've got the election. We've already seen Biden talking about just, yet again giving out money. We've got the Chinese talking about buying $40 billion of housing inventory. It's like you can't ask for a better setup. You've got institutions who want to buy and liquidity coming into the system. And then you've got speculative fervor going on because of meme coins. It's like, that's a perfect supermassive black hole to suck everybody in. I love observing stuff, and I've seen the Real Vision Collective, which is NFT driven. That's a community that loves being part of the community. They're super active everywhere. And then they together launched this Don't Fuck This Up token. There's something around the organization of communities and creating a digital currency around it that I've always talked about, this kind of digital nation state idea, that we're seeing something nascent here forming. Now, they won't all work, but somebody's going to crack this. Obviously, Yuga tried it with the ape coin, but they're kind of, Yuga land kind of fell apart for a while. Now, whether they get it back together or not, different matter. But it's close. There's somewhere somebody's going to crack this. I'm a citizen. My passport is my NFT. It's my digital ID. Here's my system of currency of which we operate towards in our community. That's kind of interesting. I do much like I do with the crypto market overall, is I leave the early stage stuff to others because it's hard, right? Because you really have to I just don't have the attention span to be able to deal with it. So then I just wait for something that feels like a breakout and, whiff, bonk. And you think, whatever level you get them at, $1 billion, can they go to 100 billion? Yeah, in a stupid market, 50 billion, 30 billion. I'll take a 30x, and I feel like I've de-risked it. While somebody else will make much bigger returns, but will take a lot more risk doing it. So I just feel like de-risking it's actually easier. Maybe it's less fun for sure, but it's just, if I'm trying to make money, then I feel like de-risking it's the way. Look, obviously I sit on the SUI Foundation, but coming at it from a independent observer, it's got great technology, it's got stuff, it hasn't got a full narrative yet. The price is not outperforming Solana yet. So it's as simple as that. You can listen to me all day and I could say, oh, it's the most amazing thing ever. It's going to be the new Solana. Show me the price action. I think that we will see this later on in the cycle. I think it'll be one of the chosen ones. Like it was AVAX, Luna, Polygon, and Solana last time around. There's going to be 4 or 5 of these that'll all explode. My guess is probably in that pack. But let's see. Let price show us the way.
Raoul Pal concludes by talking about important macroeconomic variables influencing the cryptocurrency and traditional financial industries. He cites impending US dollar infusions, rate reductions around the world, and discussions about government stimulus as factors that will encourage institutional investment. Pal delves at the rise of online groups, experimenting with NFTs and community currencies, speculating on how these developments can transform digital economies in the future. His approach to investing places a strong emphasis on waiting for certain market leaders to surface amid speculative trends. Pal emphasizes the significance of demonstrated market results in directing investment decisions, but he is also optimistic about new initiatives and technologies like Solana. This cautiously optimistic perspective highlights his strategy for negotiating the changing financial and digital asset world. So what do you think about Raoul Pal's thoughts? Feel free to tell us what do you think in the comment section. In order to receive updates on additional in-depth opinions and analysis from experts, please give this video a thumbs up, subscribe to our channel, and hit post notifications. Until next time, happy investing.